Hey, good morning, everybody. I want to show kind of like what it looks like when tallying up all your overhead expenses in a budget. So I'm on the budgeting screen inside of SynkedUP, and what it looks like is essentially like this is the pre-populated kind of template that we have to kind of jiggle your memory as you go down through the list of making sure that you're documenting every piece of overhead expense that your business might have. And there's kind of there's kind of two things to keep in mind when filling this out. One is to make sure you're not missing anything, even the little things like client gifts at Christmas time or something, right? Make sure you're not missing everything because again, every dollar that you spend on an expense that wasn't accounted for, what was supposed to be your profit is what goes to pay for it. And then the second point is to make sure that you're projecting forward. So maybe I spent 2,000 on uniforms last year, but I'm probably going to need to spend 3 or 4,000 this year. So like projecting forward, like, okay, look what I spent last year, and don't just type in the same number. What do I think it's going to be next year? And so those two things, just literally making sure you're not missing anything and projecting forward and budgeting for tomorrow, not for the business you were yesterday. And budgeting worst case scenario, because again, I'd rather budget worst case scenario and have a little bit more profit in the profit bucket rather than budget not worst case scenario and have less money in the profit bucket and more that went into the overhead bucket. But anyway, this is just kind of a list. We got everything from marketing expenses like website, advertising, general marketing, uniforms, client gifts, just finance charges like bank fees, insurance, credit card processing fees, interest expenses, taxes and licenses, equipment and truck, like this is maintenance and for equipment and vehicles, repairs, rentals that you would pay for out of pocket, like in case one of your machines breaks down or something, fuel, sponsorships, donations, charity, and then all the overhead staff, like the staff that's not involved in actually producing billable work out in the field, but they're things like office admin, marketing staff, shop mechanic, sales staff, owner's salary is a big one that needs to be in here. Payroll taxes and labor burden we usually dump in here in this bucket. Any gifts and bonuses above them for basically for overhead staff, because gifts and bonuses for field labor staff is over there on the field labor side, not on this sheet. And then professional stuff, like if you wish you could hire a coach, put it in. If you wish you could not have your mom-in-law do your accounting anymore and hire a professional accountant, put it in. Any other professional fees that your business hires or gets a freelancer to do for you. Small equipment like job trailer tools, small engine equipment, just stuff like levels, DeWalt's, tape measures, dead blows, that kind of thing. That there's always just make sure there's a budget there for what you might spend in a year to keep that stuff updated. And of course, subscriptions and dues, QuickBooks, SynkedUP, postage and delivery, travel. Like this one often gets missed for like taking employees to trainings or trade shows or events, things like that. And then of course the easy stuff like utilities, and then miscellaneous expenses down here, office supplies. Shop rent's a big one. Like even if you're working from your garage where there's technically no rent, you still want to make the business pay you as the owner or whoever owns that real estate rent, because let's say for whatever reason the business grew too big and or you can't do it anymore, you can't run your business from that location anymore. You want to be budgeting and your business so that it's pricing its work, so that if you did need to move to a commercial location or pay for a shop rent somewhere, your pricing's already kind of built in to handle that. Plus, you need to be paid for the ownership you're taking that in that real estate. So if your business is using your own house to run its business out of, you as the owner need to be paid for that, because you and the business are two different entities. That's the thing we often get mixed up. And then finally, at the end, I just like to dump in a fudge factor for things that I can't anticipate that I think might come up, usually 5 to 10% of the total overhead bucket. You can do what you want here, but that's kind of what I like to do, just to make sure that I am not going to be dipping into the profit bucket to pay for overhead expenses. But that's kind of a quick overview of what this looks like. It's really the game of making sure that I'm not missing anything and thinking forward, projecting forward. So hope that's helpful. Let me know if you have any questions. You can either comment on this blog or reply to the email. Cheers.